Hello everyone, and welcome to this specialist trading presentation of the Dynamic Duo. Welcome and thank you once again for attending this presentation. My name is Primo. I am the president and founder of Specialist Trading. And often in today's markets, you need a 1-2 punch in order to really get on that road to consistency. And today I'm going to talk about two of our best products. This is a strategy as well as a short-term trending tool that I learned while I was on the floor of the Pacific Stock Exchange. Just to give you a little bit of background about myself, yes, my background is in stocks. I started trading roughly 38 years ago. I was on the floor of the Pacific Stock Exchange. That's where I began. I was on the floor for a total of 16 years. In 9 of those years, I was a specialist for DLJ, Donaldson, Lufkin, and Jenrette. So I've seen just about every market environment imaginable. I traded through the crash of 1987. I've traded through bull markets, bear markets, sideways markets, just about everything you can imagine. I left the floor in the mid-90s to manage money and to pursue my own trading. And specialist trading was conceived roughly about 7 years ago, and that's where I just teach and mentor all of my students, all of the current things that I've accumulated and that I currently use in my own trading. We are first and foremost an educational company. We're all about teaching you how to empower yourself with all these techniques so that you can ultimately make your own trading decisions. Now, before we begin, as always, I ask that you please take a moment to view our disclaimer. I'm going to show you a lot of performance results using our Dynamic Duo, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So we're required to show you our disclaimer. And as you're taking a quick moment to view that as well, I would like to invite each and every one of you to follow us on Twitter. In fact, this is our handle right there, abbreviation for Specialist Trading. It's at SPCLST. TRADG. I post a lot of great free information on a daily basis, anywhere from daily financial wisdom to actual signals that we're currently in. And this is not just in stocks, and it's in also the Forex markets as well as the E-mini. I posted a signal that we had just a couple of days ago, 3 or 4 days ago, in the Canadian dollar, which already has a profit of roughly about 400 pips. Or close to about $4,000 roughly. Also, a couple of weeks ago, we posted a signal that our members were currently in to go short the E-mini, and that generated roughly about 50 points, or $2,500 per contract. So we just like to keep you involved after the fact, after our signals have been generated, so feel free to follow us on Twitter. Now, one of the things I really like to get straight before I teach any of my presentations is what I stated earlier. We are first and foremost an educational company. I know a lot of people go to websites and become members because they want someone to tell them where to buy, at what price, where to place your stop, where to exit, and you basically want to take yourself out of the game. And it's our opinion that this is the reason why most traders lose, because you are basically giving your power away to someone or something else, either an indicator or some trading guru telling you when to buy or sell. I know this firsthand because this is the way I used to trade, and it really didn't net any very valuable results. In fact, for the first couple of years as a trader, I couldn't make a dime. It was because I was relying on outside sources to tell me what to do. Now, I was lucky enough to have a few mentors on the floor. These were specialists themselves who have been trading around 40 years, and they were able to teach me all the things that I currently teach to all my students and members. And the way they did it, the process is that they made me take control of my own trading destiny. In other words, they didn't want me to mirror them and take their signals. They wanted me to take the information they had given me and then decide for myself where to buy and where to sell. So this is what we do with all of our members. Even though we have strategies and techniques that generate signals, and we supply our members with these signals, but as an educational tool, because we want to educate you so that you can make your own decisions. So that's why you see here, my goal is to teach you. My goal is not to trade for you and tell you where to buy and sell. My goal is to teach you how to trade with the specialist edge, the same edge that was taught to me. So this is what I'm going to be teaching you in a small capsule today with this free presentation. I'm going to be sharing with you two methods. So let's start out with method number 1. But before we begin, also I'd like to mention that I know a lot of you like to take or ask questions, and I know a lot of webinars where you'll go to will take questions during the presentation, but I'm a little bit different. I'd like to take the questions at the end. So run this kind of like a classroom. So if you do have any questions, kindly wait till the last 10 or 15 minutes. This won't be really long, so in about 20 minutes from now, we'll reserve all the rest of the remaining time for any questions, okay? And I'll answer one question because this is the most popular question. Is this being recorded? Yes, it is. So if you have to leave early or if you're having technical difficulties, don't worry. I'll give you a phone number as well as an email address at the end of the presentation where you can request a link to this presentation. Okay, so I'm going to be sharing with you two methods, our dynamic duo. So let's talk about method number one. This is probably our most popular tool that we have at Specialist Trading. It's the PET-D. But what exactly is the PET-D? Well, first of all, it's a proprietary algorithm. This is an algorithm I was introduced to on the floor of the stock exchange over 30 years ago. And what it is it's a short-term trend identifier. Now, we have overall trend identifiers that tell you where the overall trend is. But if you want to find out what the short-term trend is, and this is great for fine-tuning your signals, we apply the PET-D. But how do we apply it? Well, with the luck of some programmers and some high-speed computers, we applied it as a color bar tool. So what it does is it changes the color of the bar you're looking at. It doesn't matter if it's a 5-minute bar, a tick bar chart, or it doesn't matter if it's a weekly bar. So when you see a series of green bars, this is telling you the short-term trend is up. And conversely, if you see a series of red bars, the short-term trend is down. So this is the beauty of this is so that you can apply any strategy in that direction, or you can use it as a confirmation tool. So as we look here at this older chart of Twitter, we see here that the stock went straight down, kind of bottomed out, and then went straight up. Now, the problem with trading like this, what most traders do, is they'll be long the position based off some news or some trading guru to buy it. And roughly when it gets down this low, this is when they'll sell. Okay, as it starts to go up, they kick themselves saying, why didn't I hold on to it? Well, we have a better technique for that. We just want to follow the short-term trend. So if the trend is down, telling us that it's going down, then we either are shorting it or are on the sidelines if we don't like to be short. If the trend is up, then we want to be long. Okay? The only problem is, how do we find the short-term trend? Well, we simply apply the PET-D. As you see here now, we've applied the PET-D, and the bars now turn from green to red right here. So as you can see right at the very top, the bar turned red, and then the market fell out of bed. Now we turned green at the bottom, turned red again, and then started to go back up. So how do we use this a little bit more conservatively? Well, what we tell our students, and this works better on longer term time frames, anywhere from hourly or 4-hour charts to daily bars. The conservative way to apply this is to wait for 3 consecutive colors to tell you that the trend has changed. So rather than just use this first bar right here to tell you that you were going lower, wait for 3 bars of the same color to initiate that we are now in a downtrend. So roughly at $40, you could have exited the position and missed all of this sell-off, okay? Now you had a nice green bar right here, but remember, we want to see 3 consecutive green bars. And we had 2, but then we went back to red. So we're still, for all intents and purposes, in a downtrend until 3 more green bars appeared right here, and that was your key to either cover your short or to re-enter at 34. So you could have exited at 40 and re-entered at 34 and held it the entire way up. But please remember, this is not a system or a strategy. This is just a short-term trend identifier. And this technique of waiting for 3 consecutive color bars works better on longer time frames. As you see here, if we look at a longer time frame, here's a weekly chart of the E-mini, all right, coming all the way up until the beginning of 2015. Now, looking in hindsight, you could see here that, boy, it would have been nice to know that starting roughly 2 years ago, the E-mini on a weekly basis, which is a representation of the S&P index, has been going straight up. How could we have known to stay long in our portfolio? Well, we simply apply the PET-D. As we see here, since the beginning of 2013, even prior to that, the majority of bars have been green. Sure, you have 1 red bar here and there, maybe even 2, but remember, we need to see 3 red bars. We had 2 right here, but then we quickly went back to green. So but for this entire time, we have been still in an uptrend over the weekly basis, all right? Now that's a weekly time frame. If you want to go down to a 4-hour chart of the British pound, looking in hindsight, going back to this chart, you could have saying that, wow, boy, we have had a really strong decline in the British pound on a 4-hour chart. We applied the PET-D, and we see here that roughly right here at these highs, you could have seen that that's where the downtrend began, roughly at 70, 80, and you could have been short the entire way down once you applied some strategy. And then we can also go further out. We can go out to monthly charts. Here's a monthly chart of the S&P index. Okay, the S&P index is not something that you could trade, but it's a great measure of what the market is doing. Now, these are all monthly bars, and you see here we have the highs and lows going back 20 years, back to 1995. You see how the market went straight up, hit the dot-com bubble, and then fell out of bed. Then started to firm up again, and then we hit the housing crisis bubble here in 2008, went straight down, and then we've been going straight up ever since. If we're a portfolio trader, if we like to hold on for the long term, how could we have stayed away from these crashes and been in the market when it was going up? Well, you once again apply the PET D. And as we see here, the majority of bars were green all the way up until right here in 2000. Where you wouldn't have got out of the top, but you would have avoided all this crash that happened from 2001 all the way to 2003. Once you had 3 more consecutive green bars, you could have ridden this nice rally all the way up to 2007. At the end of 2007, going into 2008, you would have exited your portfolio and once again missed this tremendous crash. And then the entire time up, you would continue to be long. We still have not had 3 consecutive red bars on a monthly time frame. Remember that 3 consecutive color bars works great in a longer time frame, anywhere from daily bars to weekly to monthly. You won't see it work too well on an intraday time frame because there's so much noise in that. But do you see how powerful this tool is for discerning the trend? Now, one of the great advantages of this is not that we're promising that this happens all the time, but many times it will tell you the direction of the trend prior to a news event. I know so many people rely on news to tell them whether to be long or short, or whether this is a good buy, or whether they should be in the actual stock or future or whatever we're tracking. But as we see here, we're looking at an older chart of open table. Now, open table basically in roughly 6 months ago was kind of going higher to just basically sideways. Nothing was really happening. There were some rumors of it being bought out. Now, let's say you were interested in getting involved in this, but you didn't want to jump the gun too soon for fear of maybe nothing was going to happen, so you didn't want to really be involved until you had a little bit more insight. Perhaps maybe your trading room would have told you to buy, or maybe the volume would spike up, or some indicator would tell you it's time to get in. Now, had you done that and waited, well, guess what? You would have missed it because coming into this day, I believe Priceline decided they were going to buy out the stock roughly about 30 points higher or so, or I should say more about 50 or so points. Now, the beauty is once we applied the PET D, we see here that roughly weeks before that announcement came out, we had 3 consecutive green bars. And on the 27th, that's when we had our signal, our setup to tell us that we were in an uptrend, so that we should be looking to go long open table. Now remember, we still need structure. We still need a strategy here to tell us to go long, but we'll get into that in just a few moments. All right, so that's how powerful the PET D is. Remember, if you have any questions, please wait. We won't answer any questions up until the very end of today's presentation. But if you see how powerful that tool is for helping us be in sync, because so many traders lose because they're out of sync with the trend. So once you know the trend, I mean, half the battle is over. You're in sync with the market. It doesn't guarantee that you're going to make a successful trade each and every time, but what it does do is give you a higher percentage for a successful trade. You know, you increase the probabilities once you're trading with the trend. So once you know the trend, you need to apply some structure. We need to have some type of structure to tell us when to enter, where to exit, where to place our stop, and that's where we talk about strategy 4. This is our, to date, most consistent strategy for trading virtually any market, whether you trade the futures, whether you trade intraday, whether you trade weekly stocks, whether you trade the currency pairs. It does not matter. That's how consistent this strategy is. Let's go over some of the highlights of this particular strategy. It's virtually for all traders, from beginners to advanced. We have people trading this that have only been trading the markets for roughly a couple of weeks. We also have hedge fund managers trading this. Same rules, same strategy. It's basically designed for traders who are looking to catch quick momentum moves. So the basic format of this strategy is that it gets you in and out rather quickly. Now, let's say you want to hold on much longer and squeeze as much profit as you can out of the particular trade. Well, you can do that. We teach you how to do that in the course. Now, it's intensity level from 1 to 3, with 1 being the most intense, meaning you have to be glued in front of your computer at all times, with 3 being the least intense, where you can just basically enter your orders and walk away. This is right in the middle. It's a level 2, very moderate, very simple way to trade. It only uses one indicator, and we're going to share that with you. It only uses one indicator, and basically it's a pattern recognition strategy. We're looking for a specific pattern of roughly up to 10 bars that we're looking for. Remember, you can apply this strategy on any time frame, in any direction, and in any market. Now, remember, we want you to be able to spot these. After a little practice and mentoring from myself in the course, you will be able to spot strategy number 4 signals, regardless of the market or time frame. But in the beginning, as a member of Specialist Trading, we provide you with automatic buy and sell arrows, just as a learning tool so you know exactly when a valid signal has been generated. Now, our edge at Specialist Trading is consistency. You notice that we haven't said that we're looking for the home run and we're a statistical company where we generate thousands and thousands of % per month. We don't believe in that. We're not a stat company. We don't keep stats. We are an educational company. And through our feedback, through our members and students, they've told us about how consistent these techniques and methods are. I know personally how consistent they are because this is what I personally trade as well. Now, here's what you're looking for with strategy number 4. We're looking for a bar. This is a setup bar that closes in the top 25%. This is part of the pattern. We can't give you the entire rules because it wouldn't be fair to people who have spent so much money for this strategy, but we're giving you a couple of them. And basically, the setup bar must be a bar that closes in its top 25%. Why? Because that's an indication to buy. The market is telling you that most likely it's going to go higher. So regardless if this is a 5-minute bar or if it's a weekly bar, the indication is to buy, to go long. Conversely, if we see a bar and it meets all the other rules of the strategy that closes in the bottom 25%, well, that is an indication to sell. All right? Why? Because the market is giving you a clue. You notice we say the market. We don't say that some technical guru or someone in a chat room. We're saying the market. The only thing you really should be listening to is telling you that it most likely is going to continue in that downward direction. So this is a great clue coming from the market itself telling you that most likely we're going to continue. Now this is one of the rules of, I believe, the 6 rules in this particular strategy. So we want to have buy indications and they can only be generated above the 50-period simple moving average. That is another rule we're giving to you. So in other words, when we see one of these bars that closes in the top quarter of its range, it has to be above the 50 simple moving average, okay? We cannot be below. And conversely, if we see a bar that closes in the bottom quarter of its range, well, sell indications can only be generated below the 50. So the 50-period moving average is acting as our overall market directional tool, all right? So when price is above the 50-period, the overall trend is up. Therefore, we're looking for bars that close in the top 25% if they were above the 50-period moving average. All right? If the close is below, sell indications can only be generated below the 50-period because the overall trend is down. Let me show you some examples, okay? These are actual strategy number 4 examples. We're going to start off with some older examples, and later on in the presentation, I will show you examples that happened as recent as today. All right, let's start out with stocks. And this first example is an ETR. This is a chart going back to October up until this past week. And we ask ourselves, where is price in relation to the 50-period moving average? All right, price is above. So this means we're only looking to go long. We're not going to consider any shorting opportunity. I don't care what somebody says on TV or what some indicator tells you. You're only looking to go long if price is above the 50. All right, and we see here, even though you don't have all of the rules to strategy number 4, remember, I can't give those away for free. These are valid setups. Why? Because they meet one of the rules, which is the bar closed in the top 25%. So as you see here, they also met all of the rules of strategy number 4, and these were all buy signals in ETR starting in October all the way to this past week. How about FSLR? Okay, first thing we ask ourselves is, coming into this week, where is price in relation to the 50? Obviously, price is below. So the first thing we know right off the bat, if price is below, we're only looking to go short. All right, remember, we're looking for consistency on our trading, something to ramp up our edge for success. The best thing I can think of to ramp up your edge for any success is to be in sync with the overall trend. So many traders lose because they're trying to pick tops and bottoms. And the only way you would have lost money in FSLR right here is trying to pick a bottom. Why? I don't know. I mean, you should only be looking to sell. Why? Because we are below the 50. So once we're below the 50, we want to find bars that close in the bottom quarter of their range, and also that meet all of the rules of strategy 4. And we have 3 examples right here. So as you see, these were all valid signals to go short, applying all the other rules of specialist trading, and you would have had these nice 3 sell signals. Now, here's one thing I also want to mention, and this doesn't happen all the time, but it was an example, a great example I'd like to share with you. Here was UA. This was going back some time ago, this past year. And looking at this, one would say, well, Steve, there's no clear direction. We're kind of in a ranging market. We're not going anywhere, but we weren't able to put it on the chart, but price was above the 50-period moving average. So that tells us that, yes, we are in some type of trend. We're in an overall uptrend. So that means we should only be looking to go long. And there was a clear-cut buy setup by closing in the top 25% of its range. So this was a valid strategy number 4 setup. So you could have bought here. This was on the 18th, I believe, I forget what month this was. It may have been August or September, but this was going back some. And then look what happened. Do you see how we caught momentum, how we were able, off of this pattern that we're searching for, was able to have us go long before the big move happened. Some news obviously came out, and the stock gapped up roughly 11 points. It wasn't as if someone called us up and told us what the news was going to be. The market told us by giving us a signal, by giving us a clue, by closing in the top 25% of its range. So you were able to capture 11 points in just 4 days. Now, this can also work in this example here, CMG. You see here that we are able to view the 50-period moving average, and there's another setup to go long using strategy number 4. You see how the bar closes in the top % of its range, giving you a clue that most likely we're going higher. It also met all the other rules of the pattern going back around 10 bars. So this was our clue to go long CMG, and look what happened. 2 days later, some news announcement came out. Remember, we're not concerned with news. We're not concerned with someone telling us where we should buy or sell. We're only concerned with what the market is telling us. Keep things as simple as possible. So by going long, remember, this is a very expensive stock, but you could have just as easily applied options to this by purchasing some long calls or such. But you could have purchased them, and then you would have had a 75-point gain in just about 2 days. Let's see how this applies to the E-mini. We looked at daily bars and stocks. Let's look at some different charts and different time frames. Here's a current chart of the E-mini on a daily time frame. You see here that someone would say, well, Steve, how do you trade this? We're above the 50, then we go below. It's kind of difficult. Well, this is a more advanced way of trading. I'm not going to say that our beginners trade this way, but remember, we want to see that price at the very minimum closes above the 50-period moving average in order to generate a valid signal. So if we see here that we have a price bar that closed in the top 25% right here, so that was a valid signal to go long that our students were able to take advantage of on the 17th. Now, just a couple of weeks ago, on the 9th, we just barely closed below the 50-period moving average right here. So that was a valid signal to go short. And look at the sell-off that occurred after that. Now, those are daily bars. We can look at a 5-minute chart going back to the 16th, which was last Friday. All right? Price was originally below, but then after the first hour, Pacific time here at roughly 8 o'clock a.m., first hour and a half, we started to trade above the 50-period moving average. 5-minute chart. And look at all the buy signals that were generated using strategy number 4. These bars close in their top quarter of their range as well. Lastly, we can apply this very same technique, same rules, same application to the forex markets, the currency pairs. Here's a older chart of the euro dollar. At the beginning of this chart, we're above the 50 period, so that means we're only looking for buy setups. Towards the middle of this chart, we go below the 50, so we're only looking for sell setups. Okay? We had 2 nice buy setups and then followed by 3 nice sell setups. Now, I want to show you, because we've talked about consistency, we've showed you some really nice trades and showed you how it works, but I'm not going to sit here, the way some educators will, and tell you that it works all the time. It doesn't, okay? There is no strategy or system I know of or any technique that works 100% of the time. You will, from time to time, have minor drawdowns. That's the beauty of strategy number 4, though. usually when it does have a minor drawdown, it gets back on track after a few initial setbacks. But how can we increase our odds even more? Let's look at this older chart of SNDK. We see here that we close in the top 25%. We are above the 50, and it meets all the rules of strategy number 4. So obviously, let's say you would become a strategy number 4 member, and you said, boy, I'm going to trade this. This looks perfect. And then you buy, and then look what happens. Well, your very first trade is a loser. At this point, you probably say, this guy, Steve Primo, is no different from all the other guys. None of this stuff works. I'm just going to watch it. I'm not going to actually trade it anymore. And then you wait a couple of weeks, and then you get another signal. But you're not going to take this one because it didn't work before, and you're a little bit suspicious of this technique after all. And then, guess what? Lo and behold, this one works fantastically. You would have made all your money back in the loss, and you would have probably made a little bit more. So this lends us to the question, how can we increase our odds for success? How can we at least try to avoid or filter out some of those losing trades? Because they will happen from time to time. We're not going to say we're going to get rid of all losing trades because we know that's impossible. But how can we at least filter out some of them? Is there a way? Well, yes, there is. This brings us to our dynamic duo. We combine the PET D with the strategy 4, and this is our dynamic duo. We introduced this technique about a year ago. We've had so much success. We've turned so many traders consistent for the very first time in their trading by applying these 2 techniques. This is how much we believe in it. I use both of these on a daily basis, and let me show you how consistent they are. All right, if you get a buy setup using strategy number 4, that setup, the bar that closes in its top 25%, must be colored green in order to confirm. Okay? This will give you a higher probability for success. Now, if we look back at SNDK, we see here that we had 2 buys. This one did not work out, but this one did. So how could we have known to only take the second setup? Well, we apply the PET D. Remember, all buy setups should be colored green. Once we apply the color bar algorithm, we see here that the first setup was colored red, giving you a clue that most likely we're still in a short-term downtrend, and this one won't work. And it didn't. But once we got the second setup, it was colored green, giving you the confirmation to take the trade. See how simple that is once you apply these 2 tools together. Now conversely, if you want to go short, if you get a setup bar that closes in the bottom quarter of its range, that should be colored red. Okay, why? Because it's confirming that you're in a short-term downtrend. Now, if we look at this older chart of ROST, we see here that we had a number of sell setups. Okay, 1, 2, 3, 4. The first 3 did not work at all. In fact, you most likely would have been stopped out on all of them. Okay, remember, sell setups need to be colored red. Was there a way we would have known in advance to filter out the losses? Well, we simply apply the PET D. Remember, sell setups need to be colored red. This setup was colored green. This was colored green, and this was colored green. So you would not have taken any of these trades. And you would have saved yourself some losses. But the very last setup was colored red. So that was giving you a clue, an edge, to go ahead and take the trade. It was giving you confirmation, and look what happened. Okay? And we're not promising that this is going to happen on each and every trade. We're not promising home runs. We're just trying to instill consistency in our trading. Okay? Remember, as I stated, we are an educational company. We're not trying to tell you that you're going to make thousands and thousands of dollars per month. We're just trying to get you back on track so that you can take charge of your own trading decisions. All right, so let's look at some more current strategy number 4 and PET D examples, our dynamic duo examples, going back a few months and even going back just to today. If we look at KLAC, we see here that we had 2 signals going back October into December. The first signal was a buy signal that obviously did not work out well. You would have been stopped out. The second signal was a buy, and this one worked out well. How could we have known? Well, remember, buy signals need to be colored green. So we apply the PET D, and this buy signal was red, so we would have missed out all of this loss. And this one's green, and we would have taken it. So you would have stayed out of trouble by not taking that first trade. How about ABX, all right? Obviously, ABX is going straight down from September all the way down into November. We had 2 signals. One was a buy, one was a sell. How could we have kept out of the first buy and only taken the second one? Well, a buy needs to be colored green. A sell needs to be colored red. Once we apply the PET D, we see that the buy was colored red, so you would have bypassed that. The sell was colored red, that one you would have taken and reaped all of these gains here to the downside. How about BBY? Okay, we have two signals once again, a buy signal here in October that really wouldn't have worked out. You would have gotten stopped out. And then another buy signal coming into November that would have had a nice profit. All right, two buy signals, both should have been colored green. Once we apply the PET D, we see that the first was colored red, so you would not have taken it. But the second was colored green, so we would have taken that one. So you see how we're getting confirmation by using this dynamic duo. How about letter K? We had a sell signal here that would have been stopped out, and then we had a buy signal that worked very nicely. Sell should have been colored red. As we apply the PET D, we see that the sell was green, so we never would have taken it. The buy should be green, and it was, so we would have taken this one. How about GPC? This is just going back the last couple of months from December up until this last week. We have two buy signals. Both should be colored green once we apply the PET D. The first signal was colored green, so you had a very nice trade here going up from 104 to roughly 108, 109. The second buy signal was colored red, so you would have missed this and not taken it at all, and it would have been a good thing because look what happened after that. How about Netflix? This is an older chart going back to October. We had three sell signals, okay? Each sell signal actually was a really nice one, but if we apply the PET D, we see here that the first sell signal was colored green. So even though it would have been a profitable trade, you most likely wouldn't have taken it. The beauty of strategy number 4 is once it sees another setup, though, it will generate another signal. So this second signal was generated with a red bar, and you could have taken that and look at all the points you could have made to the downside. Remember, once again, we're not saying you would have gone short this actual stock, but you could have purchased puts on this. Now, had you missed that, well, you got another chance here in mid-November to go short. It was a valid signal because it was colored red. So you see here the consistency of strategy 4. Even if we didn't apply the PET D, you see that you would have done well just trading strategy number 4 on its own. But we gave you that extra, level of consistency, extra level of confidence in taking the trade once you saw that it was colored red. XLNX, this is going back this past month into December and beginning of this year, two buy signals. All right, once we apply the PET D, we should see both buy signals colored green. Well, the first one was colored green, so look what happened. You had a very nice move to the upside. The second one was colored red. It's a good thing you didn't take it because look what happened. You would have been stopped out. How about Tiffany? Okay, this just happened this past week. We had a really nice buy signal generated. We're above the 50-period moving average. All right, just taking strategy number 4 on its own. Remember, it has a high level of consistency, but sometimes trades won't work out. So that's why we need its dynamic duo in place, the PET D. So if we had applied the PET D, we need to see the buy setup colored green. And we see here that the buy setup was colored red. So we would have bypassed this buy signal altogether, and some news came out. Now remember, Tiffany didn't call us up. I believe it was something about its earnings or its closing stores or whatever. I don't even know what the news was. Remember, the most important thing to listen to is the market. If you wait for news, oftentimes it's after the fact, as we showed you earlier with some other examples with the open table and things of that nature. Same thing with Tiffany. The market itself was giving us a clue that it was going higher, but the PET D, which also listens to the market, was telling us that it was still in a downtrend. Now, even though it may go higher, we want to confirm it first. So that's the beauty of when you combine these two tools, which are based off of the market. Silver, we look at commodities here. We see here an older chart of silver in October. We had 3 really nice sell signals generated using strategy number 4. Each one would have been a valid signal, and each one would have done well in the marketplace, but we just want to have some confirmation. So we see here that each one was colored red, giving you the confidence to take each signal. Now, if we look at a current chart here of gold, GLD, that's the ETF based on gold, we see here that at the very beginning of the year, the first trading day, I believe, of 2015, a buy signal was generated. It's above the 50-period moving average. It closed in its top 25%, and it meets all of the rules of strategy number 4. So a buy arrow is generated. But remember, once we have our dynamic duo, we simply don't take the trade. We want to see if there's confirmation using the PET D. Therefore, this must be colored green once we apply the PET D, and it was. So this gives you the confidence to take the trade, and look what happened in the following week or two. Also, you can apply this to crude oil. Here's an older chart, or actually a current chart from October all the way into the first or second week. We see here that we are below the 50, so there's no reason why we're interested in even trying to pick a bottom in crude oil. All we're going to try and do is go short. So we add structure, which is strategy number 4, and it generated 3 very nice sell signals on a daily basis. But we want to make sure and bring our level of consistency even higher by applying the PET D. So all those sell signals should have been colored red, and guess what? They were. So do you see how you have the confidence to take a trade? Now, we've been showing you stocks, and we've also been sharing with you a few commodities. Let's go and look at the E-mini. All right, here's that weekly chart of the E-mini we talked about going all the way back to 2013. These were all valid strategy number 4 signals, and they were all confirmed using the PET D. So if you wanted to apply them on a weekly basis, you could have. But we realize that some people like to trade the E-mini on tick charts. So here's a tick chart of yesterday. This was yesterday's action. These are all valid signals trading strategy number 4. As you see here, here was a buy signal in the first half hour of the day, or I should say the first 5 minutes, and then it was followed by 4 or 5 sell signals. Now, this is the only signal that most likely wouldn't have worked out. We're not going to, once again, I'm not trying to cherry pick and show you the only ones that work out. You most likely would have got stopped out on this, but that's okay, because if we apply the PET D, we see that this was a valid confirmation to go long, and all of these were valid confirmations to go short. So even if this one would have been stopped out, you could have gotten right back in a few moments later and made all the money back. And then lastly, we can look at the currency pairs. Here's a Canadian dollar chart, a daily chart, all strategy number 4 signals. The bars close here in their top quarter of their range, as you can see, and they're all validated by applying the PET D, meaning that they all are the color green, giving you the go-ahead to take those trades. I just want to share with you one last chart here, the euro dollar. The euro dollar has really been falling out of bed. A signal was generated on a weekly time frame using strategy number 4 to go short. Now, even though this is a more advanced trade because we're oscillating above, below the 50-period moving average, it's a valid advanced trade. Why? Because it closed in the bottom quarter and it closed below the 50-period moving average. Now, the only thing we want to make sure of is that it is colored red. So we apply the PET D, and yes, in fact, all of these bars are red. Even though we were above the 50 period, the short-term trend is still down. So this is giving you the confidence on a weekly basis. And you know, a lot of currency pair traders like to trade currency pairs in a portfolio long-term. So on a weekly basis, you would have known to be short the euro dollar. And look what has happened. This was given back in July all the way to a current chart in the first or second week of 2015. So let's recap before we go to the question and answer portion. We share with you 2 of our most popular as well as consistent techniques. The PET D, which is a tool that was introduced to me on the floor of the exchange. It's a proprietary tool. We can't reveal and divulge what the actual formula or calculation is, but we can tell you it's based off momentum. And it's a simple tool that must be calculated. This is something we used to calculate on the floor, but we couldn't calculate it every 5 minutes. It was too difficult. With the help of high-speed computers now and programmers, we were able to have it calculated on a timely fashion, regardless of time frame, regardless of market direction, and it's now a color bar algorithm. So we showed you how powerful it is. We also showed you how powerful our strategy number 4 is. It's our most consistent strategy. It's probably our most popular, excuse me, because it transfers so easily onto any market. I showed you how it works well in currency pairs, how it works well in E-mini futures market, how it works well in ETFs or commodities, and lastly, how it works well in stocks. Any market, any direction, any time frame. Now, the beauty is these are both highly consistent techniques, but when you combine them, you even ramp up further your odds for success. This is why we call it our dynamic duo, because they work so well together. We simply use the same rules for strategy number 4, but we apply the PET D as a confirmation tool to tell us if it's okay to take the trade. So, in conclusion, I want you to ask yourself, and ask yourself honestly, do you think these edges could have helped your trading this past year? As I so often state, most traders like to start the beginning of the year with all these goals and aspirations on how they want to finish off the year. I know many traders probably started out 2014 with all these goals of thinking where they would be, how well they would be trading, how their P&L would look, and most likely none of those were met at the end of 2014 coming into 2015. That's why traders are always searching, and that's why traders, the majority of traders, fail, upwards of 80%, because they don't meet these realizations, mainly because they're based on faulty techniques or faulty methods. Therefore, you're giving your power away by trying to listen to someone or someone else tell you what to do. It's much better just to take something that has stood the test of time, that has a high level of consistency, and then learn how to apply it for yourself. I really think any one of these edges could have helped your trading this past year. So that's why, if I can take a few moments here just to tell you about the great offer we have for all the attendees today. This is our combination. We're having a 2-for-1 attendee special. We're applying the PET-D tool with strategy number 4. This is our dynamic duo. You get instant course access, detailed instructions. We give you all the entries, all the exits, all the stops. I know a lot of you, once we go into the question and answer period, will say, well, Steve, where do I place my stop? Where do I get out? Where do I exit? Well, that's all in the course. We can't give this away for free, just the way you can't walk into a restaurant and ask for a free meal, or other people have paid for the meal prior to you entering. It's the same way with this. These are great, great strategies that can really ramp up your odds for success. We also give you signal alerts. As you saw there, we will also have the add-ons with the buy and sell arrows as learning tools so that you'll know how to spot these. And then lastly, you get access to my personal email so you can ask me questions whenever you like. This is a great 2-for-1 attendee special. Let me show you how valuable this dynamic duo is by showing you some current setups. In fact, this is what happened yesterday and today on a 5-minute time frame. Strategy number 4 and the PET-D. These were 2 sell signals generated yesterday to go short. They were both confirmed using the PET-D. Why? Because they were both colored red. Later on in the day, yesterday, you got a confirmation to go long. It was confirmed with a green bar, okay? Now today, coming in today, I took the snapshot roughly a couple of hours into today's trading. You had 1 buy setup off of the first bar, then 2 more buy setups, okay? Each one would have been profitable using strategy 4 with the PET-D. Now this is on a 5-minute time frame, yesterday and this morning, just to show you how consistent these techniques are, all right? Let's say, I know you're saying, well, Steve, I don't trade the E-mini, I trade stocks. Well, once you become a member of Specialist Trading and you join the Dynamic Duo course, you are privy to getting email alerts. This was an alert we sent out to all of our course members last night on the 20th for trading on the 21st. We had a buy signal in love, LUV. We send you out these email confirmations so that you know exactly where to buy or where to sell. But remember, these are for education purposes only. After you do a little studying and research on your own through my guidance and help, you'll know how to spot these anyway. So you won't need these email alerts. But in the beginning, we send them out to you as educational for you to spot them. And look what happened. I took the snapshot this afternoon of LUV. Here was the trade to go long. You would have purchased it, and roughly the the stock was up roughly about 3% this afternoon. I don't know how it closed, but already applying just our most conservative techniques, you would have had a profit, or at least you would have moved your stop to unchanged applying this technique. This was today, okay? So just trying to show you how consistent and how recent these techniques can work for you. It's not something where I know some educators will go back and show you great setups that happened a year ago. We show you things that are happening all the time. Remember, once again, this is a 2-for-1 attendee special. This is our most popular course to date. It's the Dynamic Duo because it's so powerful. You get all this included in the course as well as access to my personal email. Remember, this is a mentorship, an educational program, so that you can access me whenever you like and ask me questions. Now, if we sold these separately on our sister site, which is protraderstrategies.com, if we sold these strategies separately, they would roughly cost you close to $3,200. But because of our affiliation today with all our attendees and to show you in good faith, we're dropping the price down to $19.95. As well, we are including payment plans. This means that we know that a number of you cannot come up with that lump sum in one payment, $19.95. That's okay. If you contact any of our trading consultants, we can work with you and structure a payment plan so that you can be up and running as early as today. You can be seeing the course material and applying the add-ons with the access of just a nice payment plan that the trading consultants will put together for you. As we stated, if you are interested in taking your trading to the next level for 2014, contact our sister site, Pro Trader Strategies. This is their email address, trading@protraderstrategies.com, or you can call any one of their trading consultants directly at area code 310-598-6677. Now, if you're interested in taking advantage of that deep discount, which we just shared with you, that's the link below, okay, as you see there. But you're going to have to cut and paste that onto your browser. I believe if you look to the right in your chat box, you will see a link already posted there. So if you don't want to cut and paste that onto your browser, you can simply click on that link in the chat box and it will take you directly to that promotional page so that you can be up and running very quickly and just simply purchase this program. But let me go to your questions once again. I'm going to leave this on the screen, so if any of you want to contact the good people at Pro Trader Strategies, that's the access information there as well as the link. And I want to thank you for waiting on any of your questions. And let me just try to backtrack here. Okay. Let me get to the questions first. It says, can we use this with any market or any time frame? This is from Michael. Yes, Michael. I think I just went over that. I showed you tons of examples in stocks, E-minis, the currency pairs, as well as ETFs, as well as commodities, how well this works. I also showed you tick charts. I showed you weekly charts. So, yes, it transfers over very well. Okay. Let's see. Let's see, great if it in, let's see, Michael asked, great if in this stock but not a common occurrence. I'm not sure what you mean, Michael, great if in this stock but not a common occurrence. I'm not sure which stock you're referring to, but we showed you a number of stocks. I believe I showed over a dozen stocks of how well this works, so it's kind of something that we're not really sure of what you're asking. Michael asks also, there were several other closes in the top 25%. Correct, Michael. It's a very good observation. But remember, you need to know the strategy rules because we're looking for a specific pattern. Just because it closes in the top 25% doesn't give you the go-ahead to go buy. You have to also know what the pattern is you're looking for. This is what we teach you in the course. Okay. How do we weed out the thousands of potential and focus on only the few that are the best prospects? Well, with the programs that we have, which this works the best on, which you have the add-ons for, TradeStation, Metastock, MT4, as well as NinjaTrader, you can put together some type of screening process, and so that you'll be able to screen out which ones have the pet D and which ones were strategy number 4. It's very simple. Okay. For example, on the radar screen in TradeStation, you can just show all the strategy number 4, and it will show you the strategy number 4 setups just for that day. And then you will have the pet D applied on your screen, so you can just go through them and you know, very simply, very easily. I've been doing this for years, and it takes me roughly, at the very most, I look through the entire S&P 500. It takes me maybe a half an hour, okay, at the most. Now, you know, if you have a small portfolio that you like to trade on a consistent basis, it will just take you a matter of minutes. John asks, what is the PET D? I came in late. Well, I can't go through everything and show you all the examples, but the PET D is an extremely powerful momentum tool that tells you the short-term trend. And what we've done is turn it into a proprietary color bar algorithm. So when you see a series of green bars, the short-term trend is up. If you see a series of red bars, the short-term trend is down. And the beauty of this is that once you know the trend, then you know what strategy to apply or what direction to apply your current strategy to. The best strategy we know of that has the highest levels of consistency is strategy number 4. So we've just showed you how well those two work together. Let's see. John asks, how much is the PET D alone? I already have number 4. Well, John, don't worry. We won't make you pay for the full price together. The people at Pro Trader Strategies can work something out for you so that you're just paying for the PET D if you already have strategy number 4 on their list. So they can work with you on that and give you a really good deal because you're a valued customer already. On asks, do you have a trade room? No, we don't have a trade room, Owen, because we don't really believe in them. Remember, as I stated in the very opening of the presentation, it's our philosophy that most traders lose because you're taking your signals or relying on someone else to give you the signals of what to trade, what to buy, or what to sell. We feel that trading rooms or chat rooms are crutches because what most members try to do is they try to emulate the trader in the room or someone in that room. And this just leads to confusion, you'd be self-doubt. If there's one thing I've learned over my 38 year of trading, it's that no two traders trade alike. So this is really a crutch rather than something that will help you. It may work for a little bit, but overall, you have to learn how to follow your own style. And we give you all the tools, all the recipe for designing that, also my mentorship, so that you'll be able to trade on your own. We don't want you taking your signals or listening to other people, what they do. That only really serves to confuse you and complicate you. If that works so well, why are most people that go to trade rooms and chat rooms still struggling? Why do 80% of most traders fail? It's because you're relying on those things to tell you what to do. Don't look or take, at least with a grain of salt, outside sources to tell you what to do. 80% of what your decision is based off should be only coming from the chart in front of you. Okay? Joseph, he's a member of ours. He says, hi, Steve. This is Joseph. I've been a member of yours team for 2 weeks. I've never had a losing trade. Oh, thank you, Joseph. Today I made 14 points, 3 trades. First trade, 7 points. Second trade, 4 points. Third trade, 3 points. It works great. Thank you so much, Joseph. He's a very a good trader. He's a brand new student of ours. He has the combo, and he was unsolicited, and this just shows you, and I believe Joseph is new to trading as well. He's been trading for a while, but he hasn't had any consistency. Now, we're not going to once again sit here and tell you that every day is like this. There will be days where you'll have some small minor losses, but once again, it's a 2 steps forward, 1 step back approach. We're not like other sites which tell you, oh, you consistently and guaranteed to make so much money every month or every year. No, it's up to you how much you want to make or how much risk you want to have per trade because you are making your own decisions. But Joseph is new to our program here, and he's done very well so far. Okay, thank you, Joseph. Milor is asking, is this being recorded? Yes, it is. You can contact the people at Pro Trader Strategies, either call or use the email address, and they'll send you the link. Michelle asks, can you use this trading after hours and or during the London session? Yes, it works whenever there is market activity, but please remember that, you know, with any trading technique, it doesn't have to be one of mine or someone else's. If there's low volatility, the level of consistency goes down much more, okay? Only because the volatility has decreased, so there's a lot more noise. But I still apply it. Many times I will trade the E-mini markets if I have a busy day coming up and it doesn't allow me to trade during the regular session. I will be trading prior to the opening, and you will get some really nice setups. Okay, so yes, it does work. L.A. Decker, oh, another student, here we go, is saying, just a comment of appreciation for the PET-D and strategy number 4 software template that is both built in for candles and bar charts. Very user-friendly. Thank you, and Pro Trader Strategies. You are very welcome. Okay, this is another student that has had considerable success and is on their way to consistency. So we have a number of people here that have just signed up. They're fairly new students just from attending these presentations, just the way the majority of you are as well. Let me scroll down to some more questions here. I don't want to miss anyone if we can in the short time we have. Let's see, Michael is saying, you said PET-D is not good for daily, monthly, not intraday, but strategy number 4. First of all, before I go on further in the question, Michael, no, I didn't say that the PET-D is not good for daily or monthly or not intraday. I think you didn't understand. What we stated was once you're using the 3 bars, the PET-D is great for intraday. I used it today. In fact, I showed you those strategy number 5 signals on a 5-minute time frame. So I don't know where you understand where it's not good for intraday. What we stated is that when you see 3 consistent bars, that will tell you in a more conservative fashion that you have changed the trend. All right, rather than just saying, well, we turned from red to green, so we now must be in an uptrend. If you want to be more conservative, wait for 3. And that technique, that single technique on its own, works better on a larger time frame. The reason is because intraday there's more noise where you may be able to jump back and forth, okay? So that's where we're staying. So let me just answer that right away. So to answer your question, does this lose reliability if using for an hourly or minute? It doesn't lose reliability. It's not as consistent. But remember, I'm not talking about the PET-D as a tool. I'm talking about that technique applied to the PET-D, meaning using it for 3 consecutive bars. Now, hourly, I don't think it loses any consistency. But once you go below hourly, you start getting into noise. So therefore, I use the PET-D intraday every day. I just don't wait for it to be 3 red bars or 3 green bars. I just take the signal and wait for confirmation. Okay? Bull is asking, any warranties on your system? No, well, first of all, it's not a system, it's a strategy, because systems mean that you have to trade them the exact same way each and every time. This is not a system, this is a strategy which is based off rules, but we teach you different techniques to trade more conservatively, more aggressively, which gives you roughly about 30% used for your own discretion, meaning your own insight. Therefore, we don't have any statistics, or we're not a statistical company, we're an educational company. Now, we don't give any warranties in terms of money-back guarantees. What we do believe, you'd have to contact Pro Trader Strategies. They do have some type of system in place where you can exchange for another technique if it's not, meeting your needs. We don't have a lot of people that do this, but I would contact them. But in terms of money back, no, because you're getting all the rules. And we've been burned a lot by a lot of people in the beginning when we first started specialist trading roughly 7 years ago, where people would get all of our rules and all of our techniques and learn everything and then ask for their money back just out of fraud because they wanted to sell the technique or share it with other people and do it for free. So it's really not fair for us or in our best interest. We're giving you 38 years of experience and what we feel is for a pretty good price. And plus you're getting personal mentorship from me. You're not just getting something that we give to you and say, well, good luck, hope it works. You're getting, access to my email and being able to converse with me whenever you like. So this is, something that I use on a daily basis, and our reputation and our integrity is really what we bank up on. Okay. Michael says, you too much noise during day for PET-D. Sorry, Michael, if you could restate that. You too much noise doesn't make sense grammatically, so I'm not sure what you said. You said too much noise for intraday. Okay, Michael, I'm going to say this one more time. To apply the 3 bars, there may be too much noise to use that technique. In terms of using the PET-D, no, there's not enough noise there. But in terms of applying the 3 bars to tell you a conservative manner that you're in trend, there may be too much noise, okay? I hope that makes sense. I think you're having trouble with that. And just know that we showed you tick charts with the PET-D. We showed you 5-minute charts with the PET-D. We showed you 4-hour charts with the PET-D. Each one of them produced significant results, okay? So there is consistency on an intraday basis. Now, the only thing we said is that if you're using a conservative approach of waiting for 3 bars to tell you the direction, you may get some noise on an intraday basis. Therefore, we would apply that more to daily bars, okay? I hope that makes sense. And we showed you tons of examples, all right? We even showed you 2 examples from today. We showed you how LUV worked out great for our members. And remember, most members would have taken that signal last night, strategy number 4, and PET-D course members, because they had confirmation. We also showed you a 5-minute time frame of the E-mini yesterday coming in today. I believe there were a total of 8 signals generated in that day and a half, and each one was profitable. So, once again, I know a lot of educators will show you, cherry-pick examples that worked well maybe months ago. We're showing you what happened just in the last few days, even as recent as today. This is how powerful these techniques are. Now, remember, if you want to take your trading to the next level for 2015, if you really want to get to that point where you can really feel consistent, I strongly suggest you take advantage of this deep discounted offer. These strategies may even go up, these techniques may even go up in value throughout the year, closer to $5,000. We have hedge fund managers who use these, who are really willing to buy the actual use of these, so that we just have it leased out to them. So if you want to take advantage for something that's really deep discounted At the same time, you can make a monthly payment plan. I strongly urge you to take advantage of this low discount rate before this offer is no good any further, okay? So please, if you have any questions, contact the good people at Pro Trader Strategies. This is their email address right in front of you. It's trading@protraderstrategies.com, or you can call them directly at 310-598-6677. They can set you up with that payment plan. You can be up and running as early as today. Now, if you just want to take advantage of the discount and just buy it online, there is the link provided in the chat box on the far right. In closing, I'd like to thank you all for attending today, and I really hope you can get your trading on track for 2015. The best way I know possible and how to do that is by applying our dynamic duo, so please take advantage of that offer. I wish you the best of luck trading, and I look forward to all of you becoming students of mine at Specialist Trading. Thank you so much for attending. I shall see you next time. Bye-bye.